It's about that time of day again. My name is Joseph. Wednesday evening, December 12th. Welcome back to your nightly newsletter. I help new traders just like you earn consistent profits using a simple three-step trading strategy. And my plan this evening is to identify the best locations to look for my favorite entry patterns tomorrow morning in my trade room. And tonight, I'm covering crude oil, S&P, Nasdaq, gold, and euro. Crude is bearish with a strong run lower, and that tells me to expect at least one more leg to the downside. So I'm looking for a key reversal line for selling opportunities tomorrow morning. The S&P is bearish, hunting the low of the range tonight, so my plan is to find selling opportunities on the way down, and I'm looking above the moving average for some buyer failures along the way. The Nasdaq is also bearish with a beautiful 1, 2, 3 reversal, which means I have a hidden channel and I'm waiting to sell that hidden channel off the highs tomorrow. Gold is trading sideways ahead of tomorrow's highly anticipated ECB announcement, which tells me to stay patient and wait for opportunities to fade those breakouts, buying low and selling high after the news comes out tomorrow morning. And the euro is bullish, but we're right in the middle of this wide range. So my plan is to look for seller failures to buy the low of the range tomorrow morning. You know, these markets are rotating beautifully inside some key trading ranges this week, which means we have an easy plan of attack for tomorrow's trading session. And as always, I've got another great newsletter in store for you guys and gals tonight. We got plenty of reliable opportunities setting up for Thursday morning. But before we get into the charts, I need to remind you, make sure you never miss a video by joining our mailing list. You can find all the opt-in information right on the homepage here of our blog at sidewaysmarkets.com. Also, if you're not joining me tomorrow in the trade room, the next best option is to download all the charts from tonight's video. You can find a link in the description of the YouTube channel. You can also find a big button right here on the blog at Sideways Markets. Follow that link below the video. Download all those charts. If you're not with me tomorrow in the trade room, that's the next best way to be ready for the plan for tomorrow. And don't forget, if you have any questions about anything covered in this video tonight, please remember to post them in the comments section below or use the live support tool. Call that toll-free phone number in the upper right-hand corner of our website. And if you like what you see, please help support this channel by subscribing. And when you do, make sure you hit the bell icon so you get notified every time I post another video. As always, it's great to be here with you guys once again this evening. Hope you guys had a great Wednesday trading session. But let's not waste any more valuable time. Got to get ready for tomorrow, Thursday morning. So let's take a look at the schedule here for tomorrow and make sure we know what's on the calendar. Nothing on the news as far as overnight tonight. We go into one of the last full sessions of the year, believe it or not. We have, of course, Thursday, December 13th. That is tomorrow. Don't forget, Fridays are always going to be a bit of an early in, early out scenario, especially during the holiday season. Tomorrow, Thursday, December 13th, the big news tomorrow is the ECB announcement at 7:45 Eastern time. It's been pretty common knowledge that the ECB has kind of backed themselves into a bit of a predicament. They've spent a lot of money over the last few years, and they haven't really seen much improvement on the economy in Europe. So it's going to be interesting to see what happens as far as infighting and potentially a more hawkish or a higher rate approach going into the end of the year. This could definitely send markets really reeling back and forth tomorrow. So it's always important to keep in mind whenever we have things like an ECB announcement, or in the US it'd be an FOMC announcement, right? Pretty much the same basic idea. We want to be careful before the news comes out and then give it some time afterwards. What's always tricky about the ECB announcement is that it will be very quiet on markets like gold and euro in the overnight. The announcement will come out at 7:45, but just like the FOMC announcement, the press conference that comes afterwards between 8 o'clock and usually about 9 o'clock, 9:15, 9:30, that's where the volatility really kicks into gear. So if you're trading markets like currencies, we trade the euro every day in our trade room. Gold, different metals like that. We're big fans of gold and euro in our trade room. Those markets are going to be really challenging until we get through probably 9 o'clock tomorrow morning. And you'll see here in a moment, both of those markets are stuck right in the middle of those ranges, almost, in fetal position, right, ahead of tomorrow's big announcement. So we expect things to be choppy and sloppy overnight on gold and euro. And again, be very careful tomorrow. In my experience, the euro and the gold are very unpredictable in that half an hour to an hour and a half after that announcement comes out, as Draghi has to now explain, right, in that press conference where all the reporters can ask him questions. So we'll be tuning into that tomorrow morning, 8 o'clock Eastern time. We open up in our trade room. That's the big news tomorrow, is we really got to be careful trading around those gold, right, and euro moves. Other than that, there's not a lot else to worry about. We get some minor reports of inflation tomorrow, right, in Europe, but I doubt that's going to have any real impact. I would imagine everyone's going to be watching, right, that ECB announcement and the press conference that comes afterwards. Again, other than that, though, it should be a pretty good day tomorrow. We've got a nice big set of ranges on most of the charts tonight. And again, like I mentioned earlier, with Friday being, always kind of an early in, early out, tomorrow just might be the last full day that we have into the end of the year. As I mentioned in last night's newsletter, tomorrow night will be my last newsletter of the year. I always earmark the last 2 weeks of the year to do some housekeeping issues, things that I've been putting off in the office to make sure ready for the new year. So please make sure you're aware of that. We will be here obviously for a full day tomorrow, and of course on Friday. My last newsletter will be tomorrow night, Thursday evening, as we go into Friday's trading session. Don't forget, we're going to break this whole plan down here tonight for tomorrow morning's trading session. We open up in our trade room at 8 o'clock Eastern time, and I look forward to trading the strategy with you. Let's jump into our charts. We've got crude oil, S&P, Nasdaq, gold, and euro on the schedule here this evening. Starting off first with oil, crude is bearish with a strong 1, 2, 3 run lower. We've got a trading range, a hidden channel, and a reversal line on the chart tonight. The strong move lower in my book is the big clue, right? That big move down. Get rid of these arrows here, right? This big move down, that's the big clue on this chart. Anytime we see a strong move in one direction, we oftentimes see a two-legged pullback and a continuation leg that's usually symmetrical to the strength of that move, right? Those symmetrical ABCDs or symmetrical measured moves. All I need is some level of resistance that I can combine with that two-legged pullback. Now, of course, I've got a prior swing low that will act as resistance. That's a great spot there at that 51.68 area. I'm also marking up these lows up to that high. That will create a channel to use as resistance. And then I always like to mark up those falling resistance trend lines, right? That will also be a key level of resistance. So as you can see, it's really right in here, right? This whole area right here is really where I'm looking for price. Again, give me that nice 1, 2, and let's drop that sucker back down to retest that low. Because as you recall, right, we're trading inside this big range here right now. And at this point here, we're thinking these sellers are going to want to go back down to retest that 50.65 low of the range. And we might just see this market collapse all the way back down to that big round number at $50 a barrel. Now, I have to be honest, my only concern right now is that potentially this could be another small trading range you can see forming here. We talked about this last night. There's been a lot of these kind of almost like hidden trading ranges. We found 2 of them, one on the S&P and one on the Nasdaq last night, and we were right on track with that. So this definitely looks like it could be a range forming here. It's not really that well defined, but you'll notice if I draw that range and then copy and paste it down, you'll notice we're right, kind of right at that range expansion. So I was tempted to call this just a range breakout, which would of course tell me now to wait for it to go back up and sell up around the high of that range using a similar pattern, right, that you see me mark up just looking left here, right? So that's kind of the same idea that we might get tomorrow, but I keep going back to this strong move down. You know, I've learned over the years that anytime I see a real strong move in one direction, it's not a guarantee. There's nothing ever guaranteed, but it's almost a guarantee we're going to get a very strong attempt here now to return back down to retest the low. So I'm going to give it a shot, trying to see if I can sell off levels of resistance. And so if we do have the range, we'll plan for that. If we don't get the range, right, we'll plan for that as well. Most important thing right now, though, is let's get up off of this, right? Let's get up off of this low. So I've got that strong move down. Typically, strong move down means a two-legged pullback. Now, two-legged pullbacks are great because they're going to give us that rising support trend line, right? That trend line coming up. With that trend line, I can now use it as resistance on the opposite side. I'm obviously just illustrating this for you, but that's what we call a two-legged pullback pattern, right? It's a one leg, it's a two leg, and then we look to use that trend line, right, as resistance as it heads back lower. Now, another option would be maybe we don't get the two-legged pullback. Maybe we get, right, a strong move higher here, right? Maybe it just, reverses right off of that low. If that's the case now, I still have the bears in control, which means the bulls have to prove it to us that they can take control of this. If they can't, we'll look for that pullback to the moving average, let those buyers try once again. This becomes now what we call the 1-2 try failure pattern, and we can sell right into the stops of those buyers. Now remember, at this point, right, we want to sell high. I don't want to sell as the market runs lower. So once I get my 2-try failure pattern, then I can look for that hidden channel pullback. I'll mark up those lows, bring it back up to the high, and now that gives me a sweet spot there. I can look for that confluence area between the high of that channel, right, and that prior swing. Relatively easy plan, right? In fact, it's very similar to what I'm looking for right now. 1, 2, 3 reversal, mark up that low, mark up that channel, right? And now we have that sweet spot right up around that 51.68. So this is a great spot to look for a sell. It just all that matters right now is we have to wait for an entry pattern. Now, another scenario we may see here is because this market was so strong going lower, the gig might be up here for those buyers, and we may end up going sideways down here. In other words, we may not get anybody that's willing to take profit. We may not get the pullback. We may start seeing this market trade sideways, right? The moving average will flatten out. If we see the market trading sideways tomorrow, then we shift to another entry pattern, which of course is called the nested 2-try. At that point, I'm looking for a nice strong bull breakout. Then we'll look for a 1 and a 2, letting those buyers now try once, letting them try twice, and then we'll sell into their failure. We call that a nested 2-try, and we talked about a variation of that, right, with our crown reversal earlier on this week, right? You can find that video on our YouTube channel or just scroll down on the blog here at Sideways Markets. Now, what if price keeps going lower here? What if we keep going lower? What if we don't get a pullback? What if we come in here and this thing just keeps on going lower here? Still same basic plan. This time, I'm going to mark up those highs, and we'll look for basically the same basic pattern. I want to see us go up, let those buyers now try to reverse the trend, and then we'll sell into their stop losses, right? Sell right into their failures. Again, very similar to what we saw back here and saw back here, right? Price goes up. The buyers, you can see, they try to buy the pullback at the moving average. When they fail, right, we sell it back down again. So same basic principle, whether it goes up, down, or sideways. The only difference is if it goes sideways, we then shift to using that 2-try failure pattern. Now, we've covered a lot about the different patterns here. We've talked about 2-try pullbacks, right? We've talked about 2-try failures, 2-legged pullbacks, nested 2-tries, traps, everything in between. I want to give you a lot more information about my favorite entry patterns, but I don't have enough time in this video. So my best advice would be is to grab a free trading course. I'll put a link up here in the upper right-hand corner. I'll also put a big red button right below the video tonight on our blog. That button or that link up top in the upper right-hand corner will take you over to our website at schooloftrade.com. That way you can get a behind the scenes, go into our members section, and you can check out that free trading course. So if you want to learn more about the strategies we use every day in our trade room, make sure you check out that free trading course. In the meantime, though, let's talk about what's the plan if it turns into a range, right? First of all, how would we know that it turns into a range? What'll probably happen is you'll probably see something like this. We'll probably get a two-legged pullback. We'll probably see a move lower, and that lower won't complete the full move down, and it will run back into that range. Now, you can try to buy this. It's going to be a pretty aggressive buy, though. But that would be what you'd be looking at most likely, right, for this market to end up inside, right, of that trading range. So my goal will be to grab a little bit of profit off that short coming off, keep that stop trailing, see if I can't hold this thing back down to that low. But if it runs me out now, now the writing's on the wall. It's probably going to be seen as a trading range. And if that's the case, anytime we see a trading range, we always like to use the two-try failure pattern. You can see an example back here where the bears try once, the bears try twice, then up here the bulls try once, the bulls try twice, right? As we go lower, it's one try, two try below the range to buy it, right? It's one try, two try above the range to sell it. Obviously, if we end up going higher here, it's the one, it's the two, and it's a sell back down. Let those buyers try once, let those buyers try twice. And then once we start seeing those buyers start to fail, we'll look for the signal to sell this thing back down into that trading range. Now, we talked about the ECB announcement earlier on in tonight's video. Probably not going to be too big of an impact on the oil market tomorrow or the E-minis. I doubt they're going to see too big of an impact there, but definitely on gold and euro, we'll talk about in just a moment. All right, now we've got our crude oil under control here for tomorrow. The plan is all set to go. How about some S&P? The S&P is bearish with a 1, 2, 3 reversal off the highs, a trading range, and a hidden channel on the chart tonight. The bears have control coming off the highs with this 1, 2, 3 reversal, which tells me to look for selling opportunities at the high of this channel tomorrow morning. The most important thing, however, is to avoid the middle of this range, right? If you recall, we've been watching this trading range here closely for the past few days, and we are right in the middle of that trading range. Always want to try to stay away from the middle because it's always the sloppiest, right, in the middle of that. So really what we're trying to do is get up around the high of this range as much as we can. And of course, I've got my eyes right on these two prior swings, along with kind of like a little bit of a hidden trend line coming off that high. I've really got my eyes on that area here, up above, up towards the high of that range, staying away from the middle. And of course, when we do that, we're probably going to have to use those two-try failures and those buyer failure patterns, right? So for example, as we go higher here, right, I would assume you're going to see buyers here who will think this market has reversed direction. They're going to try to buy that pullback and send that market higher. Well, the problem is it's not a bull controlled momentum right now. Momentum is bearish, and we're rotating off the high of this range. There's a big bullseye right down around that 2632, 2631 area, right? That's where those sellers are trying to go right now. The buyers have to rip this control out of their hand. So what I'm going to do is let those buyers now, let them get above the moving average. That'll count as the first try. Let them try a second time. That'll count as the second try. Then all I'm going to do now is wait for them to fail. I can sell right into their stops using what we call the two-try failure pattern. Just make sure, though, you don't chase after it, right? Don't chase after the move going lower. Always want to stay disciplined and patient. Let's mark up those lows. Let's mark up those highs. And then, of course, we're looking to sell off the highs right, of that trading range, or of that hidden channel. Right? That's an easy pattern. Another pattern we talked about earlier on this one was a two-legged pullback. It doesn't look as likely on this one, but it might, right? Two-legged pullback, use that trend line to sell off of that trend line. That might work, right? That might be the pattern we get tomorrow. Again, it doesn't look like we're going sideways, but if for some reason we did see the market start to sit going sideways here in the middle, same thing. We'll look for that two-try rule, and I always like to look for those nested two tries, those one, those two, and back down, right? Let those buyers, let them try to break out, right? Then let them try once, let them try twice, and we'll sell as the market comes back down again. And then remember, if we keep going lower here, right, if we keep on grinding lower, not much changes. We just want to make sure we avoid selling low, and we'll look for what we call trap patterns. These would be bull traps up above prior swings, so we can sell back down again, right? Just continuing here to try to sell the high of that channel, even if it keeps rounding itself going lower. So that's the plan here for the bears right now. One thing you do want to be aware of here is we are going into contract rollover. Now, as I'm recording this right now, we're watching the rollover between the 1218 and the 319, and you can see just by looking at the chart right at the analyzer here on NinjaTrader, you can see obviously there's a lot more volume on that 1218 contract. So chances are good tomorrow will be on the 1218 contract, but you're probably going to start getting emails from your broker, your charting software will probably remind you this rollover coming. And remember the rule for rollover, we're not worried with contract expiration. Contract expiration will happen, right, the last week of the month, right, a few weeks from now. What we're worried about right now is when does the volume get higher on that 319 contract? Once we see the volume get higher on that 319 contract, then we'll know it's time to trade the 319. Now, this is not just the S&P. We're also watching the Nasdaq, the Dow, the Russell, the Euro, right? Any quarterly expirations like that on the CME exchange, we'll definitely have rollover on our radar as we go through the rest of this week. Don't forget, guys, tomorrow morning, we're going to trade the entire strategy with all of our clients in our trade room. And again, if you want to learn more about all of my favorite entry patterns, grab that free class. It's linked up in the description, right, in that information icon in the upper right-hand corner, or that big red button right below the video tonight on the blog. Let's keep going. How about some Nasdaq here right now? So Nasdaq's in a very similar situation to the S&P, right? We're bearish with a 1, 2, 3 reversal, a hidden channel, and that big, right, and that big trading range that we see here. The 1, 2, 3 reversal gives the bears the clear momentum, right? You can see here as I zoom in here, get that back down there. Perfect, right? This 1, 2, 3, right, we go up, and then 1, 2, 3, that strong move off, that gives the bears the momentum that they need. And that tells me now to look for selling opportunities at resistance levels overhead. So I'm looking for levels of resistance, and it's pretty easy to see here. You can mark up those lows, bring it up to that high, and that creates a beautiful level of resistance, right? I'm also keeping my eyes on those prior swings from 17 up to 23. That will be a key level of resistance. And I'll be honest, I'm also thinking this too over here from that low there up to that high. This may end up becoming, right, a key level of resistance as well. Because as you can notice, right, this hidden channel isn't very wide, so it's not giving those bears a lot of flexibility here. So if you were to line up those lows right there up to that high, yeah, it's not pretty, but that definitely gives me another layer of resistance that I can use. You'll be amazed how often you see these little hidden channels, right, start to play big impact on your trades. So that's definitely something we're watching for as resistance. A lot of this is going to be repetitive from the S&P. I want to see it go up, right, up around the high of that channel, get away from the middle of this trading range, get up above that moving average, let those buyers try once and then twice, right? Let those buyers try once, let them try twice off the moving average, and then we're going to look to sell as those buyers fail. That creates the buyer failure setup. Then we can look for that hidden channel pullback setup off the high of this hidden channel. Remember that sweet spot there between the high of that channel and that prior reversal line, right? That's an easy way to get short off of these highs. Same thing, obviously, again, if we do get that two-legged pullback, one leg, two leg, we can use that trend line as resistance. And although it doesn't look like it right now, if we were to find this going sideways with a trading range tomorrow, let's just say for some weird reason, right? It doesn't pull back and go sideways here. If we do go sideways, then we look for that two-try failure, which of course would be one. And then I always like to look for that nested two-try, that one, that two, that back down. And if you're a client of mine, you know my favorite, right, is always to look for that little trap up above that high. That little trap, or what we call the crown reversal, right? That little trap high up there makes for a great sell back down as well. Now, also don't forget too, if this thing just kind of rolls over and runs lower here, nothing really changes. We're still going to mark up these prior swings. We're still going to look to go up and sell it back down, and we'll just simply wait and see what entry patterns we're going to get as we go. Now you'll notice here a very strong bullish reaction at the opening bell here on the electronic markets overnight. I'm of course recording this right around 6:45 Eastern time here on Wednesday evening. What would a reversal look like? You know, what would a bull reversal look like? Well, think about what it took to be a bear reversal. Let's get rid of these lines here for the measured move, right? And think about what it took. The buyers were in full control pretty much all session today until we saw a profit-taking collapse. That's all that was most likely, right? Profit-taking at the range expansion. We talked about this last night. And then, of course, we see now the sellers are given their shot to run it back up, right? This is the 1, 2, right? This is the two-try failure. This is the same pattern that we're looking for to sell, right? So the buyers had their shot to take that, right, to basically keep control. But instead, they gave it, right? They gave it up. Strong leg down, that's 1. Pull back to the moving average, 2. Strong move off, that's 3. That gives the momentum to the bears. So what did it take? It took a 1, 2, 3 reversal pattern. Now, 1, 2, 3 reversals are my way of confirming a trend reversal. I know when I was a rookie, I made a bad habit of trying to predict reversals. You know, selling in a bull market, buying in a bear market. You know, there's only a few specific times when selling when the market goes higher or buying when the market goes lower, like for example ranges, right? Inside of a narrow range, we're going to buy low, sell high, and fade those breakouts. But when the market's trending like this, though, we really want to make sure we follow that momentum. So how would that momentum turn? Well, it all starts with a strong move higher. That strong move higher will get those buyers a chance now to hold a pullback. Now remember, trying to buy this pullback just because we have a strong move higher does not make a reliable trade, because what happens all the time is we'll see those buyers fail, and people like me and soon to be people like you will sell right into that failure because the momentum is bearish. It's not a bull market. In a bear market, we're going to sell into buyer failure. Okay, think about that for a second. In a bull market, in a bear market, let's do it this way. In a bear market right now, we're going to sell into buyer failure, right? I don't sell into buyer failure, right, when the market is bullish. Does that make sense, right? So I want to sell when the market's bearish. I want to buy when the market is bullish. So we have to take this now, 1, 2, 3, right? We have to pull back to that moving average. 1 goes up, 2 pulls back, and 3 explodes off that moving average. What this will do is give us evidence now those sellers have given up control. We'll mark up that high, We'll mark up that high. That creates the channel. We'll find that channel now and look to buy off the low of that channel, right? And of course, the entry pattern we'll use on that: two-try failure, bear traps, seller failures, right? All kinds of different patterns that we've talked about a lot here so far. And again, take that free trading course and you can learn more about those patterns in much more detail. So of course, we get a nice rejection off the high of this range, right? With that rejection off the high of the range, right? We're looking for that reversal back down to the low of that range, and all we're trying to do right now is get short off of these highs. Again, Nasdaq, don't forget, Nasdaq is suspicious here for rollover, so keep your eyes on that 319 contract. I can't believe we're talking about 2019 right now. This year just flew right by. Let's keep going. How about some gold, right? Some yellow metal. Don't forget, gold tomorrow morning, going to be chippy, going to be choppy ahead of that ECB announcement, right? Gold is pretty much neutral and basically tucked into the fetal position right now, smack in the middle of this trading range. The range tells me to buy the low and sell the high using that two-try failure pattern, right? We're right in the middle of this range. What does the range tell me to do? It tells me to use one try, two try, one try, two try, one try, two try, that two-try failure pattern. We talked about those last night on the newsletter. So bottom line is we're trying to go down, one try, two try, and back up. Or maybe we get the nested two try. We go up and then one, two, and then back down. There's a lot of different variations to the two try rule. My favorite one is always that one try, two try, and then trap low, right? That's always one of my favorites there. That little trap off of that low, right? Let the sellers try once, let them try twice, right? And then trap going back up into that range. The bottom line, though, is on gold, ahead of the ECB announcement tomorrow, stay patient. Be very careful after that news comes out tomorrow, because I'm telling you right now, it will be very unpredictable, very unreliable immediately following that ECB announcement. In my experience, you've really got to really be patient until about 9:15, 9:30 on the gold and euro. Stay away from the middle, sell those highs, one try, two try, back down in. And again, you can see examples of a two try, the major two try, the nested two try, the major two try, lots of different ways in which we can buy low, sell high. The key is traps and failure patterns just outside this range. The good news is I have hundreds of examples of failures and trap patterns as part of that free trading course. There's a big button on the blog right below the video tonight. Grab that big red button and register, or grab the information icon in the upper right-hand corner to learn more of my favorite patterns. Let's keep going. From gold now, last but not least here now, over to the euro. The euro's bullish with a trading range and a bull channel on the chart tonight. The bull momentum coming off the low of this range. You'll notice that big range here. We definitely have a 1, 2, 3 reversal. It's pretty obvious these bulls have momentum back on their side. The problem we have really is we're stuck right in the middle of this, right, of this trading range. You know, that's the problem right now. We can assume now these bulls want to go up from the low of the range up to the high of the range, right? I mean, after all, they collapsed off the high, right? This has just been one big trading range, right? It's been off the low, off the high, off the low. Yeah, something tells me we're probably going to end up back around those highs. The only variable, of course, is Mario Draghi, right, and the ECB clan tomorrow morning, right? That 7:45 announcement may really shake this thing up. So, of course, again, we are watching rollover here. Probably not going to be rollover tomorrow, but maybe later on, right, this week. The key here is I want to be a buyer, but I don't want to trade the middle. Now, you'll notice what I've done here. I've actually broken up this range into 1/3 increments. You know, think of it like this, right? This is the 0, this is the 33.3, this is the 66.6, right? And of course, this would be 100, for example, right? So an easy way to do this is take out a Fibonacci measurement tool or whatever measurement tool you want, right? And break it up into thirds, especially when you have these wide ranges. This rule of thirds will really help you plan where you want to be looking for trades and where you might not want to look for trades, right? For example, I want to stay away from that middle third, right? Stay away from that middle third. Try to buy the low of the third, right? The lower third, and sell up around the higher third. And you'll notice, right, that pretty much holds true for any wide trading range. So what do we know now? We know the buyers have momentum. We know the buyers want to get back to the top of that range, and we know we're in the middle of that range. We want to focus on buying in that lower third. So now what I'm going to do is I want to see these sellers try to send this price lower. Now, you might get lucky and get just a V bottom here, but typically speaking, though, anytime we see a strong move in one direction, we're going to see sellers try to do it again, right? It'll usually come right off that moving average. That will give me now what I call the 1-2 try failure pattern, and I can look to buy right into those stop losses. So a 2-try failure is definitely on my radar in the lower third of this range. At the same time, you could draw a trend line coming down off this high. We may see it 1-2. Use that trend line as a key level of support, right, for that rally going back higher. Don't forget, if we stay in the middle of the range, we're going to sit on those hands, wait for this market to 1-2, and then back up we go. And remember, like we talked about last night on the newsletter, anytime we see a real strong move down, right, we're waiting for that second leg. While we're waiting for that second leg, we can look for the 1-2, that nested 2-try. And you can see that beautiful little trap pattern that I've talked quite a bit about tonight, which again, we call, our nickname for it is the crown reversal. Right? Beautiful opportunity there off the lows early in the session. We talked about that last night on the newsletter, so I won't repeat myself right here again tonight. So 1 try, 2 try, back up we go. What if the market keeps going higher here? This is always a tricky part. What if the market keeps going higher, right? What if we don't get the pullback? Then what do we do? Write this down. Anytime I find myself running out of open space, I always focus on traps. And trap patterns mean if we're bullish, we look left, we find these prior swings, and we look for traps, which are basically a pullback that responds immediately right below a prior swing. Nice, strong signal coming off of that swing, right? A trap pattern wouldn't be, though, if it pulls back and keeps going, right? That's not a trap. A trap pattern would be a nice, strong bull reaction right off of that low. So if we do keep going higher here, that doesn't mean just throw our hands in the air and say, heck with it, let's just buy this market. That's when the real professionals shine, because they'll stay disciplined, right, to make sure that they're not chasing the market higher, right? We want to buy at support in a bull market, not buy at resistance. So if the market keeps going higher here, mark up those lows, right? Mark up those prior swings and look to trade those bear traps. So guys, don't forget tomorrow morning, ECB announcement here on the euro. Be careful. Right? Be careful on that ECB announcement tomorrow. My experience, things get pretty nasty on the euro and the gold immediately following, right, that announcement tomorrow morning. Remember, it's not just the announcement. It's 7:45 announcement followed by the press conference, and we usually don't calm down until just after the opening bell at 9:30 Eastern time. Now, we've gone over the plan tonight. Tomorrow, we're going to execute the plan together with all of our advanced members. You can learn more about what it means to be a client here at School of Trade by visiting our website at schooloftrade.com. I'll put all the links in the description of this video tonight. But you can pick up the phone and call me anytime if you have any questions. I always have live support online, so if you have any questions, you can always hit me up on live support. I've got a great free trial. As part of that free trial, you get my free trading course, which I talked about many times already tonight in the video, as also a free pass. Come out and join me as a guest in our trade room. Check out our classroom sessions, our beginner, intermediate, and advanced classes. Pick up the phone and give me a call anytime. And remember, right, tomorrow morning, 8 o'clock Eastern time, so make sure you're there right along with me. Guys and gals, it is awesome to be here and share this with you every evening. Hope you learn it. Hope you earn it. And as always, my name is Joseph. Be well out there. Be nice to each other, will ya? If I don't see you tomorrow, though, right, we'll see you same time, same place tomorrow night. Adios, amigos. Bye-bye for now.